Thank you, Madam Chairman, and welcome everybody. I'm here to close before you and talk about the world wheat market, but why don't we all stand up for a minute, because we've all been sitting. Stand up, 1 minute. Just shake it out. It's all good, and then we'll get ready, okay? It's all very good, but thank you. So, the world grain markets in the last year have really been directed with politics and weather. That has been the main driver as we look at things. And as we think at the market themes as we go forward, there's really been some issues that we in the United States and around the world have come to know. We have things like Brexit and Putin, who's now taking over the Russian grain industry. We've got, of course, our President Trump, who wants to make America great again. We've got things like Macri, who's coming up for election here in October, Bolsonaro. All of these are affecting grain trading as it looks today. And we have in the United States this big pledge to have a deal that would involve trade of $50 billion of U.S. agricultural goods. It's a huge deal, but it fell apart. Mr. Trump kept asking for more and more from the Chinese. The Chinese said no. They walked away. So now Mr. Trump is left with nothing. And we fear at AgResource that this trade problem will now go on into the election in 2020 in the United States. This provides tremendous opportunity for Argentina because you're going to be looking at the Chinese demand not only for oilseeds but potentially even for grains. World wheat stock use ratios are a record low. This makes 2019 very important. The Russians are a little dry today. It's already been said that the U.S. has got this major problem with flooding. This is getting the grain markets up at least for a few weeks. The next 2 or 4 weeks, we should have a high in the world wheat market and the world corn market, and all of this will be done in terms of the supply side. Now, we at AgResource believe that world weather patterns are really changing. Climate change is real. And I want to talk a little bit about why that is in terms of the warming of the poles and why the United States has been so wet and Europe was so dry last year and what this all means in terms of global crop production. But here today, when we think about the markets and we look at what our themes are, African swine fever is a big deal and it's going to stay with us for years to come. I said 2 to 3 years, but I worry it may be a decade. The only demand driver that we had in terms of world agriculture was China buying more soybeans every year. If China does not buy those beans, world farmers will shift more acres to wheat and corn. And so we're going to see an abundance of that, and we're going to look for more corn and wheat acres as we go forward into 2020. So today, the world grain market is caught in these political and weather cross-currents. Okay, the Russians may have a weather problem that cuts 10 million metric tons off their crop, but it does not engender a lasting bull market. So we all need to be aware of these opportunities because short crops have long tails, and all longer term, unfortunately, we don't see markets that are going to be shifting to a lasting bull trend for either Argentinian, U.S., Russian, or any other farmer. It's all going to have to be based on demand. Now, if you look at what USDA modeling is, this is where they expect global stock use ratios of corn, soybeans, and wheat all the way out to 2028. Now look at our favorite commodity up there, wheat, and notice that wheat world end stocks change very little. They're relatively flat. In other words, you need weather problems to get things going because you in Argentina want to produce more wheat. The Russians are talking about producing 120 million metric tons by 2024. That's 40 million metric tons more. We see other countries like in the United States looking at maybe more corn production or soybeans, but the wheat market, if you look here, really doesn't have a demand story. If there's going to be a diminishment of stocks and use, it's going to be in corn and soybeans. Now, one of the things we do at AgResource is we stack world harvested acreage on top of themselves. You see here soybeans, corn, and wheat. Notice the last big bull market we had was during the 1970s. That's when Russia came with their gold bars to buy lots of world grain. In between, we go sideways, but we just had this other run to the upside, which was based on biofuels. ethanol, biodiesel, mandates that were put into place in terms of the EU and US that caused big increases in demand and caused another 124 million acres of world cropland to be brought into production. In between, we get this, which is the world does not need any more grain, so the markets offer less potential, and we basically go sideways. So we're looking for that next demand driver. What is going to be the thing that consumes more grain, 10 or 20 million metric tons a year of wheat, that lifts us ever upwards? The other thing we know, that population, we all hear this story about needing to feed 9 billion people by 2050. And you can see this very linear trend that's really been entailed since 1970. However, in some countries like Europe, the United States, Russia, Japan, populations are actually in decline. Women aren't keeping up their side of the bargain. We need 2 children for each couple, but that just doesn't happen anymore. So the rate by 2026 in terms of population growth will be dropping to 1%. That means that we're not going to reach 9 billion people by 2050. It may be 2060 or 2058, but it's going to take longer. But if you're in the wheat business, the grain business, you want to look at where the population is expanding the fastest. And we can see here that there's really one country that has the advantage over the rest of the world. That continent is called Africa. And I have spent more time in the last 3 years in Africa than any of the other countries that are listed there. Notice that Japan, Germany, and China are all seeing their demographics and their populations turn over. So as you think of wheat trade and you look at soybeans, coarse grain, or wheat, you want to know where that opportunity is for Argentina to sell more wheat. It's clearly right here. Sub-Saharan Africa and Mideast Africa is the big opportunity for wheat going forward. And so if I'm in Argentina, I am focusing more of my attention on Africa than any other continent in the world. Notice in soybeans, the only opportunity is with what? China. And that graph may be over-optimistic relative to their African swine fever. But in terms of grain consumption in wheat, it's not only people, numbers of people, it's also income, because to buy calories takes money. So if you look at who by 2026 will be having an income greater than 20,000 US dollars, a little bit above the Argentinian annual GDP per capita rate, you see that China and India are obviously the 2 countries you want to focus on. They will have 150 and 151 million people that will reach that threshold of $20,000. It's a big deal. So Africa holds the opportunity for numbers of people, but in terms of having income to buy more grain and more calories, it's India and China. And we know that India is a big wheat producer already, so that's why the United States and others are so focused on that Chinese market. It was mentioned a little bit about debt. The world has $237 trillion of debt. The United States now has $23 trillion, that's with a tree, of debt. And you can see how the world debt levels have just exploded. And when I put it on a map to show you where the major debt is, the United States is the big problem. Now, the United States is the reserve currency of the world with dollars, and commodities globally are traded in dollars. But I worry longer term whether or not the United States will be that basket or that currency that everybody will look to. Already we're seeing China pricing its crude oil in things like yuan instead of dollars. And so this is something that's very concerning. But maybe more importantly is that as we look to the next several years or decades, this is USDA data, growth rates, you can see how that world debt constrains growth of the world economy. You just can't keep printing paper anymore. And so if you're China or India or Latin America, notice how the growth rates are coming down, not moving up as we were from 99 to 2008 when the last calamity or recession really hit the world. We all know this guy, right? U.S. President Trump. And he is fighting to keep America great again, fighting for American jobs. He has lost his vision that we are a global economy, not something that he should fight for. But what he's really worried about is right here. In 5 years, the U.S. economy will be number 2. In 10 years, the U.S. economy will be number 3. China and India will overtake us. And so this is what the fight is really all about with China. It's not about trade. It's about dominance of the world economy. And this is why this president, at least for the moment, is fighting for it. Now, people will ask me, is Trump going to be reelected in 2020? I have no idea. Will Macri be elected in October? I'm not sure. It's worse than weather. But at the moment, I would say that the Trump's possibilities of getting reelected all hinge on trade and whether he is able to get a deal with China. This is the problem that Trump keeps pointing to, in that we have this big trade deficit with China, $418 billion. You can see that deficit of when China joined the WTO in 2001 and how it's ballooned since. The Trump administration wants some of that money coming back in the form of U.S. ag trade. And if you look back historically on tariffs, something that we've not talked about, at least in our time frame here on Earth. I use that because the last time tariffs were really amounting to much was back after World War II, when we then formed something called GATT, the General Agreement on Trade and Tariffs. That's when tariffs really had their first bite. Notice after World War II, tariff rates from the United States and a lot of other countries sank to in the single digits. Up until that point, they were used widely. Now, why were tariffs such a big deal back in World War I and II? Well, if you remember, the world was an agrarian society. Everybody was concerned about mechanization of agriculture, and that mechanization would produce too much supply and that they had to protect farm profitability. And so tariff levels went up. I wonder, as we get into technology today, if we get in that same situation, a little bit of trying to protect, at least the United States is trying to draw a circle around itself, which I find to be very concerning in this time. As you look back, that last jump up in tariffs, which reached 60%, produced one of the things called the Great Depression that happened in 1932. And this is what Trump is proposing, to put the Chinese economy at 25% on all $400 billion here if he doesn't get his way down in the, of course, Japan G20 meeting in late June. But as an economist, I want to tell you I'm a free trader. Why do I like free trade? Why should Argentina, Brazil, the United States, everybody in agriculture have free trade? Well, this chart pretty much points it out. Notice in red or orange here the number of people living in extreme poverty. And what has happened to those people as free trade, which started around 1944 as tariff levels went down, notice how the people not living in poverty went up dramatically, while those living in poverty dropped significantly. What do we consider to be extreme poverty? $2 a day. So if we look at this, the ones that really get hurt by trade and tariffs are the impoverished people of the world, those that have less than you and I. This is what Trump was looking at from the United States, $50 billion of ag goods. Notice how large that was. And notice that what a big deal that would be for China to all of a sudden go from buying $20 billion in 2017 to $50 billion this year. It would completely change agricultural trade flows around the world. Now, China is one of the world's largest corn importers. You can see in this graph here that at one point China imported 42 million metric tons of corn, making it the largest importer within the world. China still, whether it's cassava, corn byproducts, barley, sorghum, is one of the biggest importers, taking almost 22 million metric tons. It was mentioned a little earlier about African swine fever. African swine fever is not a new disease. It has been around since 1907. Started in Africa, South Africa, moved up into, of course, Ghana, then made a leap into Europe, moved across Russia from 2005 to 2009, and then showed up in China. African swine fever is a very nasty disease. Hogs bleed from the inside out. Once a hog catches the disease, mortality rates are 97% within 10 days. No chance. There's no cure, there's no vaccine. There's nothing that a Chinese or any farmer in this chain can do. The only thing protecting the Americas is the Atlantic and the Pacific. Now, this disease is a virus. It's spread through breath, biting insects, manure, urine, semen, and milk, and all of these things combine to make it a very, very difficult disease to control. We doubt that the Chinese, as much as they'll be spending in their effort to find a vaccine, will find anything that'll work for at least a decade. This virus has got many genomes. It mutates very quickly, and it's very, very potent and deadly, and can stay up to, in frozen temperatures, up for 7 to 8 days. So very difficult to control. You see here the incidence of it. What I've got on the right is the concentration of hogs within China. So there's really no chance for China to keep this disease under control. China has 700 million hogs. And of those 700 million, we think 120 million have already been infected and have been destroyed or lost. And we fear by the end of the year that number could reach up to 200 million head. That's a big demand pull, and China now has to do something to get a hold of its problem. Yet, the big thing for you and I in the room, we don't have to worry about swine flu affecting our herds in Argentina or the United States, but we do have to worry about China taking fewer imports of soybeans. So if China goes from taking 103 million metric tons down to 104 or 85 or something like that, this is Chinese soybean consumption. It's a problem in terms of what the Chinese will be looking for going forward. We see China importing about 84 million metric tons of soybeans this year. That's down almost 11 from the year prior. So the world has too many oil seeds, which means that farmers will plant more grains. A few things on weather. These are a couple of my favorite publications, National Geographic's. Notice how everybody in the media has been talking about this extreme weather events. Why do you think it's happening? Well, at AgResource, we have a climate scientist on staff. He believes that the warming of the poles, North and South Pole, is giving us a jet stream that has more angularity to it. So the jet stream is moving more down and up, which gives us stagnant weather patterns. Last year, we had, of course, all of the problems in Europe and Russia with the dryness and drought. This year, we're seeing it with the flooding in the United States. And as we look at the poles, you can see here how much warmer they are relative to normal. The chart on the left here is showing you ice sheets and how they've really fallen dramatically, while we see in the right Arctic winter temperatures and how they've risen substantially. So there's no doubt that the poles are warming. This is a really big deal as we think about weather for the next 20 years. And in terms of El Nino and La Nina, and I know all of you in Argentina and South America think about these phenomena very carefully, but notice how they've increased in frequency and how global temperatures has risen accordingly. This gives us more dynamic weather events that'll have a big impact on crop production. So as you get into growing seasons, if you had a problem like Argentina had last year with dryness, it tends to extend itself. If you have a problem like the United States has with wetness, it tends to extend itself, that crop losses get to be sizable. This was last year's, of course, problems in Europe. You can see the high pressure ridge which set up in this very cold pool of water, which was just south of Greenland. My family took a vacation last year in Iceland. They had 3 days of sunshine all summer. That was it. Not a good year to go. But it shows you how weather patterns can be stuck. And when they stick, and they stick in the wrong spot, it has a big impact on global crop production. This year you see the equatorial Pacific being relatively warm, but we do see this very cold pool of water here just west of China. This is causing the jet stream to be very strong and kick up through this, which is giving the Midwest or the central U.S. all the rain. So this is the weather pattern that we have, and it's something that, at least at the moment, is starting to show some signs of change. We'll see how it really lasts into the summer. The result in the United States has been stuck tractors, and we have lots of problems with all of the moisture. It's not really that it's been so wet, but it's been so cold. Our temperatures have averaged around 3 to 5 C to below average, which has combined with that rainfall to give us all our problems in terms of seeded crops. But as I said earlier, the last 10 days there has been change, and farmers are now planting aggressively to get seed in the ground. These are planting progress. You can see at one point we had close to 40 million acres of corn to plant. We were only roughly 39% planted on soybeans. Next week's numbers and the week after that should show that U.S. farmers are done. So it's no longer a question about planting. It's a question about what the summer weather pattern will be. And so we've taken 6 million acres off the U.S. corn area. We've added about 1.5 million of that to soybeans. So there will be a shortage of corn, but it should not be enough to give us an acute rally in the CBOT anymore. However, I do want to point your attention to our friends in Russia. They tend to have weather that's good for 5 or 6 years in a row. You can see that has happened rather frequently. Then when they get into a problem where we start to see weather that has less rain and maybe more heat, that tends to run for 3 or 4 years. So I believe the Russians will have another problem this year, which could give the wheat market lift for another 2 or 3 weeks. I don't think it's enough to change the complexion of world wheat because their friends in Europe have a very big crop this year, but I do think it could be a short-term rallying point for world values that may get Russian wheat prices up to $215 or $220 a metric ton. Let's talk for a little bit about world wheat prices. You can see that world wheat prices rallied because of last year's EU and Russian drought from about August until, we would say, February, and then we started a steep decline as the Russians continued to export and our friends in the EU followed suit. And then in the last 2 weeks, prices have rallied because of the U.S. wetness and because of our potential problem in Russia. The big, of course, thought in the Chicago markets and the world markets is how long will this continue? Well, U.S. farmers are planning, if I start to get rain in Russia, this will probably be all over. But again, the rain does not look likely for Russia for at least another 10 or 14 days. As you look at world wheat crops to be expected, we're looking for a record this year. So world wheat yields will be above trend. That trend, of course, is based on what we see the Russian crop today, somewhere around 78 million metric tons. You can see harvested area there. The U.S. crop looks very good. And so from a yield and a harvested acreage perspective, the world is looking at a record crop. You can see that world wheat supplies coming into the year are record large, including both beginning stocks and production. Yes, this does include China, but again, when I look at exporter supplies, there's no shortage of wheat in the world as we see it today. We're up 3.8%, so as the fund managers and others look at the wheat market, it's hard for them to engender anything of a lasting bull market, at least for now. When I look at world exporter supplies, including Argentina, the United States, Russia, and all the key exporters, you can see that we're looking for beginning stocks in production this year to get very close to the records. And so in the U.S., we have a sizable crop. The question will be the quality of the crop when we harvest it. The same will be of the EU, Australia, likely Argentina as your crop's going in well. So as we look at world wheat exporter supplies, we don't see a real problem. In terms of world wheat trade, however, we do see some optimism. Notice that if we start to model out world wheat trade exports this year, we see a record total somewhere around 183 million metric tons. And so the world is going to be consuming more wheat this year, largely because of the shortage of feed grains. There will be a larger trade of feed wheat around the world. And so there's a little optimism there that we can see a bigger trade in wheat, at least year on year. And notice that world wheat trade since about 2007 is now up 100 million metric tons. That's important. When I look at Argentina, you can pick out your favorite country here, the United States, Ukraine, Russia, Kazakhstan, EU, Australia, and Argentina. You can see how they've stacked up, at least in terms of 17 and 18 and 18 and 19. Yes, world wheat trade last year ended up being about 9 million metric tons less than the year prior. A lot of that, of course, due to less feed wheat trade because of the cheapness of corn around the world. Corn and wheat are always interchangeable. And so, again, notice your country as we look for the year ahead. As I said before, I think that trade number of the major exporters will be up about 12 million metric tons from where they are right now. A little bit about the Russians here. You know, when I first got into this grain business back in the 1980s, the Russians were the world's largest grain importers, taking around 27 million metric tons. Today, they are the world's largest grain exporters. And if you think about Russia, it is now looking like it's exporting about 21% of world wheat trade. That's a really big deal in terms of exporters' crops and where they're really sitting at. So the Russians have been a significant change in the landscape of world wheat. And remember, the Russian government is now, of course, taking control of logistics and elevators and banking. VTB is a very big buyer of the rail system last week. They want to control it because they see their future in having more wheat. We believe that the Russians can export 100 million, or can produce a crop, of 100 million metric tons of wheat sometime by 2022. Current production, of course, today is 80, so that would be a significant increase in world wheat production. In Argentina, your seasonality of exports is very obvious here. You can look at the 5-year average of your shipments. You can look at last year and this year. You're now down to shipping maybe 400,000 tons as we head into the month of June. But your seasonality of exports, you're basically done until we get into the new crop campaign, and your harvest will just start in November and December. That's when exports will start to leap up again. But for Argentina, the season is basically finished. And your export pace this year was good, but it started to slack off as our friends in Russia was more aggressive on their sales going forward. So notice, compared to what the USDA forecast is at 13 million metric tons, we'll probably see a downward revision of that next week. World wheat stocks, however, at the end of the year will be record large. So if we think about world wheat stocks at 280 million metric tons, notice historically that that's a fairly sizable amount, which again leaves us to this opinion. It's hard to get a big bull market in wheat until we find a new demand driver. And when I look at excluding Chinese, world wheat stocks are more in balance, but again, stock-use ratios are still moving up, so our visibility is that the world wheat market may soften to 180 or 185 for a seasonal low as we get into the northern hemisphere harvest somewhere in August or September as those exporters start to become more aggressive. So at AgResource, at least at the end of May when we made this modeling, our forecast is that world wheat prices this year will average somewhere around $217 a ton. That includes all proteins and all grades. And so when you look at the Gulf HRW or SRW or Gulf corn, you get a sense that at least for the time being, it'll be slightly higher, but not a lot higher. If there's going to be an increase in anything, it'll be in the corn price because of the shortfall in the United States. These are world corn prices. Pick out your favorite destination, whether it's the United States, Brazil, Argentina, the Black Sea, feed wheat, or of course, Black Sea barley. Notice how those prices have really changed. Notice the big drop in barley and feed wheat prices as a new harvest is forthcoming. They've fallen close to $120 a ton in the last 3 weeks. In terms of China and Brazil, they're adding ethanol capacity. China is a story, maybe a demand driver, in that it will look at expanding its ethanol capacity somewhere by 45 million metric tons a year starting in 2020 as it goes to a 10% fuel blend during that time frame. This could be an important lift to the Chinese market and to the overall grain market. We're watching this very carefully in terms of how does the Chinese actually implement this ethanol policy that they've already agreed to. And when I look at net exporter supplies and stock use ratios, notice that it's the lowest level that I can find going back after the U.S. flooding. Now, in the U.S., we're pretty certain that the United States has already lost 50 million metric tons of corn because we can't plant it, because it's too wet. That's the same as Argentinians' entire crop last year. So we've lost 50 million metric tons of corn, which is the reason why that number has come down and why we're looking at fewer, of course, stock use ratios relative to the corn market. So as we stand back and we really think about the world corn market and the world wheat market, today it's about politics and supply. It's really about what the Trump administration is going to do with China, and if there's a bigger opportunity for Argentina with Mexico and the Chinese. After that, it really becomes weather because we're lacking that new demand driver that will lift prices to substantially higher levels. I believe, at least for the moment, there's opportunity in the markets. In the United States, we know that farm marketing accounts for 67% of net farm revenue, so it never could be more important to any farm industry to be acute of what's going on in the markets and to better understand the opportunities are there. I congratulate you all on this Congress. I thank you for your time. I do appreciate all that you've done, and more importantly, I appreciate Argentina's contribution to world agriculture. Thank you very much.